Good day, fellow investors. On this channel, we discussed how the US market is overpriced. Everyone is investing into the US market, therefore stocks are expensive. However, the rest of the world offers opportunities. In that line, there is Ambev dividend yield 7.33%, which is something when you compare it to 1.3% of the S&P 500. We're going to do the standard analysis on this channel, a business overview, financial valuation, and investing risk and reward. These are the brands that you might be familiar with, and those brands are being sold in mostly Brazil, Argentina, some other parts of South America, Canada, and some Caribbean countries. Here is a better overview of the countries and the market exposure. It's also important to know that it is owned by Anheuser-Busch, so that is the global company owning 62% of the company's stock. I looked a little bit at the annual report. Now we have to see whether and how this is owned, how are the direct ownership and subsidiaries, but there is a pretty good amount of float, so traded both on the Brazilian Stock Exchange and New York Stock Exchange, and the ticket is ABEV. Let's immediately go to the business analysis, and this is from the mother company AB InBev, and you can see they have their positioning globally around the world, and their ownership here is Brazil, Argentina, some of Canada, some Caribbean. But it is a big contributor also to the parent company, and especially dividends. And something important is the parent company, as I was looking, has significant amounts of debt, 3 times EBITDA, which means they need dividends to service their debt, and that makes, again, another interesting dividend investment as a cash flow cow perspective. I looked at the last earnings call for the full year to get a sense of what's going on, and there has been significant EBITDA growth, margins growth. That is because 2022 was significantly worse because of high aluminum prices, high input prices with commodities, and not such a big capacity to transfer prices to customers. Anyway, we have to understand this as a strong cash flow company. This is billion in Brazilian reals. So 5.42 per dollar, and when you calculate things, despite the increase in inflation in Brazil and all the things going on, the company is still producing good cash flows even in US dollar standards. They have their Brazilian beer segment volume stagnating a little bit down. They have their non-alcoholic beverages segment growing there. Then we have other countries declining a little bit on volume, but as prices went up, inflation and everything, putting a little bit of pressure there. Canada significantly declining, as there is, again, a market under pressure there. But there is diversification, and despite that they are good on free cash flows. It is a healthy industry, so healthier than it was perhaps given the ups and downs of competition. And as aluminum prices and all the input commodity prices go down, margins should continue to improve in 2024. Those are also the company's priorities. So they are investing, capex, etc. And what is left is paid in dividends to shareholders. As I told you, the main shareholders needs the cash. Cash flow profitable even in such, let's say, subdued environment. There are some other issues relating to a bad situation in Argentina for now. That's normal for Argentina. A bad, a good, a bad, a good. Then there are some tax reforms that might increase taxes and take off 10 to 15% of profitability depending on VAT. They have made some reserves, but that's something also to follow, and it is a risk that can push also the stock lower when and if it materializes. But anyway, whatever happens, we see here profitability, good margins up and down depending on all those moving factors from currencies, from economics. Inflation pushed EBITDA margins down, and now it is a little bit recovering, and depending on how things go, it might recover a little bit more. I think this, from the conference call that I read through, this is the key here that the CEO says. So they are confident about volume growth, especially in Brazil. They're working to deliver solid free cash flow generation. That translates into dividends. And lastly, our main challenge in the year is taxes in Brazil, and how will the government apply those taxes and how much will it be paid. That is a risk, but if it is, again, you take 10-20% of net income and you can make a valuation going forward. Let's now look at the finances so that we can see that even with that tax hit, long term the business should still remain the business. If people keep drinking beer in Brazil, the business should do okay, despite the all ups and downs, inflation, commodity politics that are going on there. If we look at revenues in US dollars, up and down, and now we are up again, so okay. Net income higher, 4 billion, a little bit lower, and now we are around 3 billion for a P ratio of, what is it, 11, 12. So you can see here, still doing okay despite the Brazilian real declining 50% versus the dollar. If I look at the balance sheet, long-term debt, it's just $72 million, which is, let's say, no longer term debt. There are some other liabilities, tax liabilities, etc., that are there, but still, compared to the 3 billion in net income, this is not such a significant issue. And you can see here the company has had, despite paying dividends, high retained earnings, which means they are creating value over time for shareholders. And if I look at the cash flows, $5 billion in cash flows from operations. There is, of course, some capital expenditure as they are investing, and they have been repaying a lot of debt the last few years, but the most goes into dividends, and if they can keep that dividend payments, that's already something significant when it comes to investing, because the forward expected yield is 7.33%, and perhaps the market is now a little bit too negative, because if you look at this chart, it is a significant decline, but if this just goes from 2 to 3, that's a 50% return for you. And then if there are some other changes, it goes to 5, 6, that's a 3x. And I would not be surprised to see that, given also the past volatility that this stock has shown. Therefore, something very interesting. Ongoing cheaper, it can always go cheaper, but if you look at the free cash flows, it's going up 4 billion, so it is a very interesting free cash flow global, let's say, dollar diversification opportunity. When it comes to the risk and reward, we are now at 52-week lows, decade lows, and it can always go lower. The dividend yield can go to 10%. It is Brazil, so that's something that can happen. However, it is a stable business, it is a cash cow, there is a dividend. There is, of course, always inflation, politics, taxes in Brazil. Some of it will pass, some of it, like taxes, will likely hit the company, and then you might have it a little bit cheaper. Dividend yield 7% compared to the S&P 500. These are the global investment opportunities that we have been discussing as an opportunity to diversify from the S&P 500. There are many more of those. Let me know in the comments for other similar good businesses, cash flow, dividends, growing businesses, global, compared to the US. Check my research platform also for much more. I'll see you in the next video.